Hello, I'm Mark Apsey, Head of Indexing at thematic Research, and welcome to the week ahead. As usual, we're going to do a quick recap of last week and then highlight this week's noteworthy economic releases and earnings announcements. So, last week, what can I say? We got a bit of a scare, right? Alphabet and Tesla came out. Tesla had a clear miss on earnings. Alphabet's was a little more nuanced. Earnings number actually wasn't that bad, but it turns out AI is expensive. And so the kind of sticker shock, if you wish, of that ended up reverberating through not just tech names, but frankly, a lot of other names, mainly because, the last 2 to 4 to 6 quarters, all everyone's been talking about is how they're going to integrate AI into their process, into their products, and won't that be great? So a little cold water on that party, if you wish. But something that happened. Well, one thing that I talked about a couple of weeks ago was this idea that Mag 7 and tech and AI and everything might be starting to cool off, but that the rest of the market hopefully would be able to pick up that particular ball and run with it. And so far, looking at the data on the earnings side anyway, that seems to be happening, right? So we're seeing some softness, some weakness in tech. This week, of course, we're going to see some other tech companies report, notably Intel and AMD, but also Microsoft. There's a few here, and I'll get to those a little later. But the point is that we have started to see some increased breadth, not only in equity participation, but also across earnings, at least for this quarter's earnings cycle. So that is something that certainly we're going to be paying attention to, and we'll keep everyone posted as we move along. In terms of econ data from last week, basically it kind of didn't matter because the PCE deflator came out and it was a month over month negative number, which was great. The year-over-year number is still up, 0.06%, but it's 0.06%, so that's actually not that bad. One of the other things as well doesn't really get into the U.S. economy that much, although there is some knock-on effect there. The last year or two, we've seen some pretty high-profile issues with China, right? We've seen that in their real estate market. We're seeing some kind of issues with their banking. But honestly, those are issues that the Chinese government basically is kind of handling internally, and whether that's in the form of them just printing a bunch more money to make sure people get paid, or just kind of telling the market, please ignore this, it doesn't matter. But one of the things that is starting to happen is that Chinese consumers, who are known for their voracious appetite for luxury goods, are starting to slow down, and we're starting to see a little softness in the luxury goods market. Now, China again has been having issues the last couple of years. We've been hearing more and more about that, certainly in the first half of this year, and so everyone's getting a little on edge about it. But we'll see what happens. But but basically, when you start talking about luxury goods, then you know that something's going on in China. You got to start to pay attention to it. In terms of markets, right? Some of that increased breadth that I was talking about earlier showed up. So like I said, tech had a bad week. We saw that in the Nasdaq Composite was down about a little over 2% this week. S&P 500 down a little over 80 bips. The further away from tech you were, the kind of better it was for you. The Dow up 75 bips, and the Russell 2000, right, small caps up almost 350 bips. So like a 3.5% week, not a bad week at all. Volatility still kind of hung in there. We did see it spike. I think it traded at like a 19 handle. But basically, we're back down to 1650, 1640. VIX down maybe about 80 bips. So really, overall unchanged. Same with gold. right? Down slightly. It closed the week last week right at 2,400. It closed this week at 2,387. Okay, um, so like I said, kind of a round trip, a little bit of all's well that ends well. And again, I think that the um, that initial tech weakness, one of the things that we're going to be taking a good look at this week, as I mentioned earlier, we do have earnings. We're kind of, I guess, we're about halfway or so through earnings. Uh, but there's some other good tech exposure coming out here, right? Tuesday we'll see Microsoft and AMD. We will see Teladoc, not really a tech name, but tech adjacent. Um, uh, Meta, of course, is going to report on Wednesday. We'll see Qualcomm as well after hours. Um, Thursday, Intel. We'll look at Roku. Apple, of course, is reporting Thursday, and Amazon as well, which gets into the other part of the story here is, of course, the consumer. And so we're really looking forward to hearing from the rest of the consumer names that are out as well. McDonald's on Monday, P&G on Tuesday, right? To a certain extent, on the financial side as well, we got Mastercard on Wednesday, SoFi on Tuesday, PayPal is in there as well, on Tuesday as well. So, we're going to get some good data points here on the consumer, and as you know, that's 70% or so of our economy, of our GDP. So, the big name here, well, the two big names on the consumer side, really, Apple and Amazon. Um, so, as far as earnings go, that's what we are looking to see, which is to see is that AI drag going to carry through to these other names, right? We have AMD on Tuesday, we've got Intel on Thursday, again, Microsoft, Apple, and a lot of kind of consumer-oriented names, right? Pinterest, Etsy, Roku's in there, Roblox. There's a few. One of the names that we're interested in and are looking at, of course, is Qualcomm. They're kind of a bellwether. Their chips are in just about everything, and they have a really good IP portfolio. So we're looking to see what they are going to report as well. When we talk about our models and our model business, it's kind of interesting. Last week, once again, space economy. Yes, it took off, but it's interesting. So about a couple months ago, AST Space Mobile went bananas because they said that they had inked deals with Verizon and I think AT&T and T-Mobile to provide regular wave satellite coverage for their clients. Well, they just completed building their first satellite that will be one of the ones to help facilitate that. So that, I think they're looking for an August launch window, but basically, the last week, I mean, the name was up like almost 50%. So that portfolio was good, and other names in the space were also trading well on that. So names like Viasat and Iridium also had very good weeks as well. Just looking down the list here. It was kind of interesting. I mean, the results were mixed. Interestingly, models that came up flat: guilty pleasure model, our core holdings model, and market hedge model, all came within 5 bips of even. Again, tech and the tech heavy or tech focused models, did not have a good week, right? Cloud computing was down, artificial intelligence, digital infrastructure, etc. And you can see these in the graphic below the video here. So looking ahead to this week, again, we're looking to see, is that tech weakness going to continue? Was that just something because Alphabet is so focused on AI that was an expense line that might not show up in other companies. I mean, I don't think so. I think we're going to see some follow on from that from companies like Meta, from Apple, potentially Microsoft as well. So we're looking at that. We're looking to get a little more insight into the consumer and where their dollars are going. You'll recall, I think it was a week ago or so, we got the consumer credit report, and basically credit exploded in May. So, it's good that these companies are getting some good earnings. It's good that people are spending. Let's just make sure we don't create kind of a debt bomb here with that. Honestly, the big news, I mean, not that there really is big news, I guess, but the Fed meeting on Wednesday, nobody's expecting anything on Wednesday, right? When you look at where kind of the action is on the Fed funds curve, the September meeting, there's about a close to 90% chance of a 25 basis point move. Interestingly, it was actually higher last weekend, but it's come off a little. It's still in the range. What is also interesting is that there's roughly a 60% chance now priced in each of the November and December meetings for additional cuts. So, again, we'll have to see what happens and what unfolds. Of course, the election is going to be happening, and we will hopefully get the results of that prior to both the November and December meeting. So we'll see what is happening there. I guess minor note, Tilray is actually one of the companies that is reporting. They're in cannabis business, and it's interesting because I think they're the first to report, at least the first major company to report now that cannabis has gone on Schedule 3. And why that's interesting is that the move to Schedule 3, while it doesn't fix kind of the banking woes and the concerns that payment processors have with processing those transactions, it does allow companies in the space to now take traditional, business expense write-offs, so that we're going to see those companies be able to manage their tax exposure a lot better. Now, what that'll mean for reporting, of course, is that they're still going to put up whatever top line numbers that they have, but as they're taking off these expenses, we might see some impact to bottom line. But I think people will understand it's because they can now actually expense stuff out, like just regular way expenses, material, capital, employee salaries, those kinds of things. So keep an eye on that to see what kind of trend that plays into. So, in terms of the coming week, again, the Fed meets on Wednesday. No one's expecting anything from that meeting. Of course, we're all interested to hear what Chair Powell has to say in general and take those questions. We will get a PMI final number on PMI on the manufacturing numbers. Again, last week we got the initial numbers out. People seem to be happy with those. The one thing that I did notice is that on both the ISM and the S&P market numbers, that they are below 50, and of course any PMI number below 50 is indicative of a contraction as opposed to an expansion. So we're keeping an eye on that. Just thinking about it, I don't think that there's much more on my end here. Like I said, we have another week of earnings. We're getting into some big names. We're going to be getting more info about the consumer through a lot of those consumer names, both the discretionaries and the and staples, and we'll just be paying attention to that. Okay, so that's it for now, and we'll see you next week.